All right. Good evening. Okay, we'll get started for today's session over here. Good. So let's do a very quick housekeeping. Okay, this is especially for those of you who are new over here. We run this on a week-to-week basis. Every Monday, we're gonna come in, share with you a little bit of the outlook. Okay, what has happened in the past week? What are some of the events to take note of this week? And then we'll look into the technical analysis portion, and then we'll end off with a quick little Q&A over here. Okay, so quick one disclaimer. Okay, as we're going to talk about opportunities, trading setups, just bear in mind that all these are based on educational purposes, and of course, trading and investing involve risk. So make sure you're aware of that. And if you need any financial advice, okay, make sure you approach your professionals. Okay. So as I mentioned, okay, every week on Monday we're gonna run this structure over here. We'll summarize what has happened in the previous week. We'll go through the economic events to take note for the current week. Okay, we'll look into the charts, and then we'll end off a little bit with a Q&A segment. Okay, so let's jump into the calendar over here and take a look at what has happened in the previous week. Okay, so last week, of course, the focus will be very much on Thursday, which we have the FOMC, Fed Funds Rate, BOE, as well as the ECB side of things. Okay, and Friday we do have the NFP, right? So if you take a look at the Fed Funds Rate first, we do see that the Fed has increased by 0.25%, as expected. Okay, when that news came out, we saw a dollar weakening. Okay, simply because we are expecting the Fed eventually to peak its interest rate and even potentially talking about recession. But of course, things starts to shift in the opposite direction when we look at Friday's labor market, okay, which came in very, very strong, which kind of put off the possibility of a very, very bad recession. Okay, and that's where we kind of saw the dollar actually strengthen post Friday as well. Okay, then if you look at Bank of England, European Central Bank, nothing much of a surprise. Okay, basically they're still pretty aggressive in hiking, and we did see the Bank of England raise rates to 4% and ECB raise rates to 3%. Okay, and just now I briefly mentioned, if you take a look at the labor market in the US, we do see unemployment rate actually falling, which is very, very counterintuitive because a lot of people are anticipating a recession in the year, right? And usually, of course, some sign of indication of potential recession is unemployment rate. So you can see, previous month was 3.5, and over here the market actually anticipated an increase in unemployment rate to 3.6, but that did not happen, right? Data actually went drop to 3.4. Okay, and that's where we did see the dollar strengthen after that. Simply because then there is that little element of surprise where perhaps, okay, recession is not really that close, or recession is not really that much of a concern. And perhaps there will be some profit taking in terms of the sell of the dollar position, or even some traders decided to go in the counter trend, okay, which we can see the dollar strength, and I'll share with you the charts analysis in a while. Okay, so that kind of sum up what happened last week. And if you take a look at this week over here, we do have the cash rate from RBA coming in tomorrow. So the market actually expect it to hike by another 0.25%, bringing it to 3.35. After that, we don't really have much. There are some speeches here and there. But again, I don't think that would be too much of a market mover. And then all the way until Friday, we do have the Canadian labor market over here. Okay, so again, if you take a look at this, the market is expecting the unemployment rate from Canada to increase from 5.0 to 5.1. If we get another surprise over here, we might see the Canadian dollar strengthening. So if you compare, this week generally is a little bit quiet relative to what we have last week. Okay, I think the primary focus would then be tomorrow on the RBA side of things. Okay. So with that said, let's take a look at the technical portion. Okay, by kicking off with the dollar index over here. So in reference to what happened last week, right? So we did see this little push down and up. So this drop here was the FOMC, Fed funds rate. We saw the dollar actually drop, the dollar weaken. Following that NFP, and then we see the dollar actually rally from there on. Okay, so from a technical point of view, if I zoom out a little bit, right, we may have completed a bigger 5-wave structure as a whole. So from this little peak here, we can see the circle wave 1, 2, 3. Okay, and of course internally here we have another 5-wave, wave 4, and then potentially this is wave 5, and then internally here we have 5-wave down as well. So overall, if that's gonna be the count, we can expect a bigger 3-wave correction, and most of the time it might come back to retest the end of wave 4. Okay, and that is gonna put us around 105.60. So that will be my view for now. Okay, and this little bounce post NFP is pretty strong, so we can see kind of very impulsive push to the upside. So if we get a corrective pullback from here, potentially towards 102, 101, that might give us a decent buy opportunity for an upside, right? To kind of trade that 3-wave bigger pullback. So if you don't trade the dollar index directly, of course, then you can take note of the euro. Kind of the inverse of DXY, right? So if you look at the biggest structure over here, quite similar. At this bottom, we have the 1, 2, 3, 4, and then of course wave 5, and we can get a very decent rejection of that previous high at 1.1030. And of course right now, quite similar to the dollar over here, we kind of anticipate that we can get a move lower back towards this bottom here at wave 4, which is 1.0480. Okay, so same kind of aspect that we're looking at over here is we want to see a decent corrective pullback, potentially towards that 50 and 618 fips. Might give us that sell opportunity, right? Somewhere around 1.0905 and 1.0935. Okay, so keep an eye on that. The pound dollar over here, it's a little bit complicated. Last week, at the beginning of the week, we're kind of anticipating a potential flag for another pushback to retest the top. Of course, dollar kind of strengthened post NFP as well, kind of push all the way down. So right now, our little expectation over here is that the momentum may continue to fall, to keep going lower, and potentially retest at 1.1840. Okay, which is this previous structure over here, and from a bigger scheme of things, that may eventually turn out to be a bigger flat structure. Okay, so from this little bottom here, we kind of have a wave 1, wave 2, wave 3. This turns out to be a flag. Okay, wave 4, and then we can still anticipate one more pushback up to complete that 5-wave structure. Okay, so for now, in terms of pound dollar here, if you're looking at short-term opportunity, personally, I'm looking at whether that trade is worth taking. Would be a correction over here, and then to see if we can get a short-term back towards 1.1840. Okay, but of course, you need to then reassess in terms of the risk-reward ratio. Is it worthwhile in looking at that short trade on the pound dollar? Right, so that's on the pound. Aussie dollar here is also quite nice in terms of the structure. I think because the dollar started to bounce higher, quite a bit of all these major pairs are also giving us a potential setup. Okay, so in terms of Aussie dollar, very neat as well. Okay, so overall here we kind of get at 1, 2, 3, 4, and 5. So if this were to drop, there's a very good possibility we might see price retest this area. Okay, and of course, if I were to pull fips from this low to this high, that would give us somewhere around 50% fit as well. So short term, I wouldn't even say this as a short term, but more of a mid-term potential setup here is wait for a pullback. Again, right now I'm looking at a 50 and 618. If you can get a decent corrective pullback, we can get that sell trade back towards that low. Okay, so quite a nice setup over here as well, quite similar to the euro dollar side. So quite a lot of all these setups are coming in. If it's not this week, then likely next week we'll see some decent ones. Okay, so that's on the Aussie. Look up for the sell side. Okay, dollar CAD is the one that I think it's still not that clear. Okay, the dollar kind of strengthened, but I think overall the Canadian dollar is not that weak either. Okay, and that's the reason why we kind of see this little choppy move, but the entire market on dollar CAD is kind of contained within a range environment at this moment. Maybe this week's Canadian labor market might give us more clue. But for now, this isn't a very clear-cut structure, right? It's complex. It's not easy to decipher in terms of like what is the wave count and things like that. One thing here to note is, of course, we're still trading within this channel, and until we either get near the bottom of the channel or break out above that channel, things are not going to be so straightforward, right? So right now, the primary projection is still a little bit more on the downside, potentially breaking that low. And of course, this can also go lower and retest the bottom of the channel before the bigger move back. Okay, so in terms of the major, I think dollar Canadian is the one that is least obvious. Okay, so my personal opinion over here is you just give it time. Okay, so there's no need to rush things through. Let the market play out. Wait for a clear structure. We'll come back at a later date. Okay, dollar yen is also quite an interesting one to keep an eye on. There are mainly two ways to look at dollar yen, right? First is, of course, what I've drawn. Essentially, this is a three-wave structure. The market's kind of testing the top of this channel here. Hasn't really broken out yet. So I'm maintaining a neutral perspective because there's a good chance this might still come back and retest that low. Okay, especially this is still within that channel itself. That's the first possibility of how it can happen. If you take another view here, is that we did have a break, out of this entire structure here. If you put that trend line in, we have a break last Friday. Okay, so there are 2 points of view. Okay, one is, of course, as I mentioned, the flag, this can come back down. Alternatively, you view this as a breakout of this channel, and then you can expect more upside. Okay, so of course, there are certain signs in which we can look out for to give us an increased probability of whether is it going to go higher or is it going to come back down. Okay, and the thing to keep an eye on is how will the market react and develop from here. So if we can get a decent corrective pullback that is slow, it's not going anywhere, a retracement, a corrective structure, this kind of structure suggests more upside, okay, which means that we'll then rotate. When we see this structure here, we'll rotate our bias towards a bullish one, okay, and we will see it as the market has broken off this trend line, and we can expect more upside. Now, if the dollar yen were to really take off from here, I think the upside potential can be quite interesting to watch as well, okay, because we don't really have, you can see this trend line here really hasn't broken since like last year, November, and this is the first time we kind of broke it. So when the market decides to go higher, it wouldn't be surprising to see it all the way back towards like 141.50. But we pull fibs from that high to that low, that will even give you somewhere around like 61.8. Okay, so it wouldn't be surprising to see that kind of move back up, right? Which kind of give you a huge opportunity on upside that you can capitalize to. Okay, so I think major pairs, moving forward from here in February to March, there might be some very, very decent and very clear structure that we can ride on. Okay, so the thing you need to do here, your role here is to, of course, just monitor the market, keep track of how it's developing, and when it's ready, you just want to jump into that trade and ride it together with the market. Okay, so that's on the view on dollar yen. Gold here is also doing a pretty neat rejection last Friday. I think generally, we talk about dollar, you can see the dollar strength across. And one thing to note is, if you've been following me on some of this sharing over here, I've been sharing with you to be buying on gold at that particular high is a bit risky, right? Simply because of the nature of how price has been developing. It's never gonna go one direction all the time. There will be bound for retracement. There will be bound of a correction. Okay, and of course, when we add those kind of structure here, this is not a setup to look for buy, right? In a way, we have been cautious on buying gold since late last year, early this year, right? But gold has continued to go higher. Okay, but I just want to point something where we may not get into the buy, right? We might miss out on certain profits as the market goes higher in certain situation like that, which is very, very seldom. But we also prevented ourselves from getting involved in a not so decent buy and avoided such cuff. If you imagine you get in here and then this kind of drop, that was a pretty scary and pretty big drop, I would say. Okay, which you can just imagine if you bought it somewhere around at this price at that particular time, which is like mid-January, you hold through all the way until here, which is like early February. Pretty long duration, right? Like couple of weeks, and within a single day, your entire profits of this can wipe out. And you also want to take note that throughout this process, imagine if you buy here and then you were in profits, but psychologically it's a toll, right? The reason is because you see on hindsight the market did went up, but during that process it went down, it went up, it went down, it went up. So basically it's not an easy one to be managing that position itself. Okay, and that's the part whenever you see something of a structure like that, just try not to be too eager in jumping into any particular trade yet. Okay, so be patient. To me, I think long-term gold is still overall bullish, right? From a daily time frame perspective, we're still looking at upside in the long term. But every market is bound to have a retracement. And of course, right now over here, after this very, very strong rally, a deeper pullback here wouldn't be extreme, right? It's going to be a very healthy trending environment with a pullback. Okay, and if you take a look at how deep this can eventually pull back, there are some key structure levels and areas around here, which is around 1800. If you take Fips from the swing low to the swing high, that will put you around 50%, right? Which is not unachievable, right? It's going to be very common for a market to pull back 50% and then continue in its overall trend after that. But this is on the bigger scale, right? This is on the daily. So if you go down to like 4-hour chart, okay, then that opens up a potential sell opportunity too, okay, which again is illustrated over here. You can get a decent pullback. Okay, I'll be more than willing to actually look for a sell in the short term. Again, back to this area around 1800, 1790 zone. Okay, so yeah, again, if you don't get this set up maybe this week, maybe it'll come to you next week. But moving forward, I think in February and March, these are some of the decent opportunities that you would probably be able to capitalize on, right? And just pay attention to them. Okay, talk a little bit about the S&P over here as well. Okay, the S&P is quite in a similar situation with the dollar yen. Okay, so from a daily point of view, you can see that we recently kind of broke off this channel, which is basically similar to the dollar yen as I mentioned, right? We can see it as a break, or at the same time, we can see it as market is basically still within this entire channel. And we recently get a very nice little rejection of that 123.6. Okay, So I'm neutral now, and I just want to see how the market react here. Okay, if we can get a decent pullback that looks something like this, which doesn't really come back within the channel area, then we can expect more upside on it. But if you kind of get a very strong continuation down and a structure that looks something like this, then this opens up more downside. Okay, so some markets are a little bit more neutral in a way. You need to give it a little bit more time, like the dollar, yen, and S&P. Some of those are a little bit clearer, like the euro dollar, the Aussie dollar, even the gold chart. Those are a little bit more obvious, okay, and those are the ones that you want to pay a bit more attention to. Okay, last one over here is Bitcoin. Again, Bitcoin is giving us a pretty neat structure right now. Overall, again, you know, from a daily scale, it has rallied quite significantly, so not surprised if it's gonna give you a decent pullback. Okay, and more importantly, we ran up towards this structure, which is facing a little bit of resistance there. So going back to the 4-hour chart, a move back down to retest that 20465 is not unusual. Okay, so short term here, Bitcoin may see a little bit more downside, especially since it broke off this. If you can get a decent pullback here, it may give you a sell setup. Okay, so if Bitcoin were to drop, then of course there's a very high chance your S&P would probably follow suit. Okay, so yeah, keep an eye on all this, okay, that we've mentioned so far. Good. Okay, so those are a few things that we would love to cover. If you have any questions, you can actually put it into the chat box right now. While you're doing that, okay, I'll also do a quick announcement. I'll go back to my slides. Quick announcement on some of the upcoming events and things that you can take note of. Okay, so first up over here, today's session, and of course every week when we run this, it's actually sponsored by Everything Trading, and the broker in partner is Zenfinix. So if today you're very new and you're looking for perhaps a broker to trade with, or okay, you would like to just have an alternative broker, okay, in your portfolio, you can actually go and search out for Zenfinix. Currently they do have a deposit bonus ongoing, which means that after you register and verify your account, when you put a first $100 deposit, they could give you an additional $88 credit. Or if you put in a $200 deposit, they're gonna give you an additional $96 credit bonus. Okay, and of course you put 500, you're gonna get 140. Now what that means is, of course, for example, okay, if you put $100, you're gonna get a total of $100.88 for your margin, right? So you can use and trade as if you have $188. Okay, so of course, if you want to find out a little bit more and understand, you know, what exactly all those credit bonuses are, feel free to get in touch directly with the team from Everything Trading or Zenfinix. You can actually click on the WhatsApp link, okay, which you can find in the chat, or if you're watching it right now in the public stream, just go over to the description below. Okay, you'll be able to see that WhatsApp link. You can click it, they'll redirect you over to Zenfinix and Everything Trading support team. The other one over here is if you have yet to join the public channel Telegram, okay, do scan on this QR code and then you'll be able to join the Telegram channel. Okay, inside every day we'll post one chart, and whenever we have an update of an event, a workshop, okay, we'll post it up on the Telegram as well, so you can be notified and then you'll be updated on what's happening. Okay, so you can just scan the QR code and you'll be able to join the Telegram channel. Next up over here, we also have a few upcoming workshops. Okay, these are live physical workshops that's happening in Malaysia. So on the 11th of Feb, which is this coming Saturday in the afternoon at 2:30 to 5 p.m, we're gonna have the workshop at Red Curtain Event Space. The title of the workshop is Getting Ready for the Next Super Cycle, which I'll be talking a little bit more into, you know, what is the capital cycle, how do you understand that, how does it impact the market. And then I'll share with you specific stocks and commodities to be looking into, okay, to start investing into as well, so that you can position your portfolio for the next few years to come. There's a very good probability that we're gonna see the next super cycle soon, okay, and you want to be part of that wave. And then we'll also talk a little bit about currency market, okay, because there's a very good chance again in this year we're gonna see some shift in certain policies, and that would kind of give you a very decent opportunity in the FX market. Okay, so if you can't make it on the 11th of February, which is a weekend, okay, the other session you can consider to join us is on the 15th of Feb, okay, which is then on a weekday in the evening, okay, 8 p.m. to 10:30. The location is slightly different. On the 15th of Feb, okay, we'll be having it at Armada Hotel. Okay, so these are two dates. And if today you would like to learn more about Elliott Wave, okay, the way how we look at the charts, the principle that we look into, how do we forecast certain market movement, and sort of, this is where the Elliott Wave Masterclass comes in. Okay, we're gonna have it as a live workshop, okay, for a full day event on the 25th of February, which is gonna be a Saturday, okay, from 10 a.m. to 6 p.m. Now, if you actually want to enroll to this masterclass online, the public retail price is at $497. Okay, but this time round, you're able to actually join, fully sponsored by Zenfinix. All you have to do is just become a Zenfinix account holder, right? So you need to be a client of Zenfinix. So same thing over here. If you're interested in this masterclass, and you would like to find out how you can actually join for free, it's fully sponsored by them, feel free to again click on the WhatsApp link, reach out to them, okay, let them know you're interested in this, and inquire a little bit more as to how you can join us on the 25th of February. Okay, so same thing over here. If you're watching on Zoom, there's a chat on the link. Alternatively, if you're watching on the live stream, there's a link to WhatsApp in the description box below the video. Okay, yeah. So good. That's all for the announcement portion. Okay, I think today I don't really see much of a question coming in, so I hope everything is clear. Okay, definitely the markets are setting up very nice little structure and setup very soon. Okay, I mean, in January this year is not as clear cut. But from the recent move, especially on Friday, I think things are starting to become way clearer. Okay, and that's where you want to ride on the next move and the next swing. Okay. Question over here I see, asking, is this English or Mandarin? All these workshops as well as the session over here, they're all gonna be conducted in English. Okay. But if let's say you have questions that you like to ask, okay, during the workshop in Mandarin, okay, you can do that, right? Because I can understand, I can reply you in Mandarin, in Chinese as well. But the primary language that we're gonna use to deliver the content and the session is gonna be in English. Okay, yeah. So good. That's all from me for today over here. Feel free to also invite your friends if let's say you want to go together and join some of these workshops. Feel free to invite them as well. But of course, right? Do register with Everything Trading or Zenfinix, because they need to RSVP the seats for you. Okay. So good. All the best to your trading for this week. Okay. I hope today's session can give you some ideas to watch. What are some of the instruments to look out for as well? Where are some of the opportunities? Okay. And of course, with that, okay, we'll end off today's session and we'll see you guys in the next one. Okay. Good night. See you guys. Bye.